Hello friends, in continuation to our lecture series on costing useful for your NHPC Senior Accountant Exam, let's discuss some further important questions in today's video as well. Friends, the first question is, which of the following best describes the primary purpose of a budget in a public sector undertaking? Option A, to guarantee the generation of profit. Option B, to serve as a comprehensive plan for the allocation and utilization of resources to achieve organizational objective, to restrict all expenditure to the absolute minimum. Option D, to fulfill a mandatory legal requirement without any strategic implications. So friends, please pause the video, think for a while. The correct answer has to be option B, which says to serve as a comprehensive plan for the allocation and utilization of resources to achieve organizational objectives. So friends, even for PSU, the budget means a detailed plan for resource management aligned with the organizational goals. Moving on.
Friends, before moving on to the next question, I would like to inform at Finance MCQ, we are offering NHPC Senior Accountant Exam course. The course covers the entire technical syllabus, that is 140 marks out of 200 marks. An entire course is having subject-wise, topic-wise MCQs, including past exams questions from other PSUs of similar nature. And this course also includes NHPC previous year exam papers, which will be helpful for your exam preparation. So do avail this opportunity. Visit Finance MCQ website, take a demo of NHPC course and start your preparation. Further friend, you can use coupon code NHSA100 to get flat 100 rupees off on the course price. So now let's move to the next question.
Friends, next question. Budget that is prepared for different levels of activities known as option A, master budget, option B, zero based budget, option C, flexible budget, while option D is cash budget. So friends, what should be the correct answer here? Friends, the correct answer is option C, flexible budget. So friends, this type of budget is designed to change with the volume of activity, providing a dynamic tool for comparing actual and budgeted results at different output levels. Moving on. Next question is, which is the key principle for zero-based budgeting? Option A, adjusting the previous year budget by an inflation factor. Option B, justifying every item of the expenditure from scratch for the upcoming budget period. Option C, focusing only on capital expenditure and ignoring revenue expenditure. Option D, creating a budget based on the performance of the previous period. So friends, what should be the correct answer here? Friends, remember that under zero-based budgeting, we are assuming that the budget is prepared for the first time. So all the workings are done from the scratch. The correct answer has to be option B, that says justifying every item expenditure from scratch for the upcoming budget period. So friend, this is a core concept of ZBB. All activities are re-evaluated each year and their cost must be justified to be included in the budget. Friends, next question. The process of comparing actual results with the budgeted figures to take corrective actions is called option A, budget formulation, option B, financial audit, option C, budgetary control, option D, standard costing. Friends, here the correct answer should be option C, that is budgetary control. So friends, this term precisely describes the management process of using budgets to control and guide organizational activities. Moving on, friends, a master budget in a manufacturing PSU typically includes which two main components? Option A, production budget and sales budget. Option B is operating budget and financial budget. Option C says capital expenditure budget and cash budget. While option D says materials budget and labor budget. So friends, think for a while and comment the correct answer in the comment box. Friends, the correct answer is option B, operating budget and financial budget. So friends, these are two major subdivisions of a master budget. The operating budget deals with income generating activities and the financial budget deals with cash flow and the financial position. Moving on, friends, favorable material variance indicates that option A, the actual quantity of material used was less than the standard quantity. Option B, the actual price paid for the material was less than the standard price. Option C, the actual output was higher than the budgeted output. Option D, the quality of material purchased was superior to the standard. So friends, what should be the correct answer? Remember, we are speaking about favorable material variance. So that has to be in the favor of the organization. So think again, what should be the correct answer? So friends, the correct answer has to be option B, which says the actual price paid for materials was less than the standard price. So friends, a favorable price variance occurs when the cost of acquiring materials is lower than what was planned or budgeted. Moving on. Friends, which of the following is a limitation of traditional budgeting? Option A, it cannot be used for control purposes. Option B, it is not based on historical data. Option C, it can be rigid and may discourage innovation if applied strictly. Option D, it is not suitable for non-profit organization. So friends, here the correct answer is option C, which says it can be rigid and may discourage innovation if applied strictly. So friends, this is one of the most common criticism. Managers may stick to the budget even if the market conditions change or a new, better opportunity arises that is not in the budget. Moving on, friends, performance budgeting, often used in government and PSUs, primarily focuses on option A, the inputs, that is financial resources allocated to a program. Option B, the outcomes and results, that is performance achieved from the expenditure. Option C, keeping the expenditure within the limits of the previous year. Option D, ensuring every department receives an equal share of the budget. So, friends, here the most logical answer is option B, which says the outcomes and results achieved from the expenditure. So, friends, this is the essence of performance budgeting, linking funds to measurable results and outcome. Friends, next question. Principal budget factor, also known as the key factor or limiting factor, is the factor that option A is the largest expense for the company. Option B requires the most managerial attention. Option C limits the level of activity of an organization. Option D has the highest degree of uncertainty. So, friends, by now you should know the correct answer. The correct answer is option C, which says limits the level of activity of an organization. So, friends, this is the correct definition. The entire budget process must start with this factor. Example, sales demand, production capacity, and it constrains all other activities. Moving on, friends, next a practical question which says a PSU budgeted to use 1000 kg of materials at rupees 10 per kg for its output. It actually used 1100 kg at rupees 9 per kg. What is the material price variance? So, friends, to solve this question, again I said you should know the formula. The formula for material price variance is standard price minus actual price into actual quantity. So a straightforward one, when friends, we are given the standard price that is 10 per kg. We are given the actual price that is 9 per kg. So 10 minus 9 is 1 multiplied by actual quantity that is 1100. So 1 multiplied by 1100 will give us 1100 favorable, since the out is in positive terms. So it has to be favorable. So the correct answer is option B, 1100 favorable. Moving on, friends, next question. The concept of responsibility accounting is most effective when combined with option A, centralized decision making, option B, a system of budgetary control, option C, external auditing, option D, strictly historical costing. So, friends, here the most apt answer is option B, a system of budgetary control. Budgetary control provides a framework, the budget against which the performance of responsibility centers can be measured. Moving on, friends, next question. A budget that remains unchanged regardless of the level of activity actually attained is called a option A, flexible budget, option B, rolling budget, option C, static budget, and option D, performance budget. So, friends, here they are asking that the budget is unchanged regardless of the level of activity. So, the answer has to be option C, static budget. Friends, flexible budget, we've already studied that it is that type of budget which keeps on changing as per the different level of activities of the company. While rolling budget, where current budget is based on the previous budget with some updations on them. Performance budget is basically prepared to measure the performance of responsibility centers. Moving on, next question. Friends, an adverse variance means option A, actual profit is higher than budgeted profit. Option B, actual revenue is higher than budgeted revenue. Option C, actual costs are higher than budgeted cost. Option D is the budget was inaccurate and needs revision. So, friends, very obvious question. Please think, let me know the correct answer in the comment box. The correct answer is option C, which says actual costs are higher than the budgeted cost. So, this is a key driver for adverse variances. When cost exceeds the budget, it has a negative impact on profit. Moving on, friends, next question. A PSU's production department is best classified as which type of responsibility center? Option A, profit center. Option B, investment center. Option C, revenue center. Option D, cost center. So, friends, here we are discussing about production department. The correct answer has to be option D, cost center. And the prime responsibility of a production department manager is to control cost while meeting production targets, making it a classic example of a cost center. Moving on, friends. In the context of a budgetary control in India's PSUs, which of the following is a significant challenge? Option A, lack of qualified accounting professionals. Option B, balancing social objectives with financial performance targets. Option C, absence of any guidelines from the government. Option D, the use of outdated budgeting software. So, what should be the correct answer here, friends? So, friends, remember that for PSUs, earning profit is not the sole objective of the company. Their all motive is also to maintain a balance between social objectives with the financial performance target. The correct answer has to be option B. Moving on, friends, next question. If the only variance is an adverse labor rate variance of rupees 5,000, what can be definitely concluded? Option A, the workers were less efficient than expected. Option B, more overtime was paid than budgeted. Option C, the actual wage rate paid was higher than the standard wage rate. Option D, the total labor cost was rupees 5,000 more than the budget. So friends, pause the video, think what should be the correct answer here. Friends, correct answer here is option C, that says the actual wage rate paid was higher than the standard wage rate. So friends, this is the direct and definitive case of labor rate variance. It measures the difference between standard and actual wage rates for the hours worked. Moving on. Friends, next question. Continuous or rolling budget is a budget that option A is prepared only once at the beginning of the year, is updated by adding a future accounting period as the current period expires. Option C covers a period of 5 to 10 years. Option D is mandated by the Companies Act for all PSUs. So friends, we have already discussed what a rolling budget is in our previous questions, so you should know the correct answer. Correct answer is option B, that says is updated by adding a future accounting period as the current period expires. So friends, this correctly describes the process of rolling budget. It maintains a consistent planning horizon, for example 12 months, by always adding a new month or quarter on the end. One. And next question. The sales volume variance is calculated as a difference between option A, actual sales revenue and budgeted sales revenue. Option B, budgeted profit on actual volume and budgeted profit on budgeted volume. Option C, actual quantity sold and budgeted quantity sold. Option D, standard sales price and actual sales price. So friends, what should be the correct answer here? It has to be option B. This says budgeted profit on actual volume and budgeted profit on budgeted volume. So friends, this isolates the effect on profit of selling a different quantity than was budgeted. Moving on. Friends, next question. This situation would make a flexible budget most useful for performance evaluation. Option A, when the company's activity levels are stable and predictable. Option B, when a significant portion of the company's costs are variable. Option C, when all the costs for the companies are fixed costs. And last option, when the company is a government department, the fixed annual appropriation. So friends, if you know the definition of flexible budget, this is quite an easy question to answer. The correct answer will be option B, that says when a significant portion of company's costs are variable. So friends, if costs are variable, they will change with activity. Flexible budget allows for a fair apple-to-apple comparison by adjusting the budget with the actual level of activity achieved. Friends, next question. Fixed budget is not useful for control purposes because option A, it is prepared for a single level of activity. Option B, it cannot be changed or revised. Option C, it is based on historical data. Option D, it is too complex to prepare. So, what should be the correct answer here? Please pause the video and let me know the correct answer in the comment box. The correct answer is option A. It is prepared for a single level of activity. So, this is the primary reason. The actual activity level differs from the budgeted level. Comparing actual cost to the fixed budget is misleading. So that's all for today, friends. If you have any further comments or queries, do mention in the comment box. See you all in tomorrow's lecture. Till then, thank you very much for watching. Take care and goodbye.